I went from an unprofitable day trader working at jobs I absolutely hated to becoming a full-time profitable trader and being able to do this on a daily basis. And what I'm going to do today is I am going to show you the way I mark supply and demand, which is a little different than a lot of other people, to be honest. One of the most common things people tell me about my strategy is they've never seen supply and demand marked this way. So I am going to make a video on how I mark supply and demand because this has genuinely changed my life for the good. Like I've said, I went from an unprofitable day trader working at jobs I was completely miserable at to becoming a full-time profitable day trader, getting results for myself, but also getting results for the people in my group. So let's go ahead and just jump right into it. And I want you guys to see exactly how I mark my supply and demand levels out. So I'm going to go ahead and just delete that for now. Now, you guys know the typical way a lot of people mark supply and demand is with a rectangle. They'll mark it with a rectangle kind of like this, right? Now, I am not marking mine out with a rectangle. And the key thing about this strategy is you want multiple time frames in confluence, okay? So the way I mark it out is with a line just like this. And now for supply levels, you're going to mark the very bottom of the candle. But let me mention this first. I just wanted to show you guys how I do it, but let me backtrack for a little. So for the people that don't know, the market likes to move off supply and demand levels, okay? So supply levels, you're going to sell from, okay? And demands, you're going to buy. So supply levels, we sell from, demand levels, we buy from, okay? Now, another thing, from supply levels, you mark the lowest point of the candle, okay? And from demand levels, you mark the highest point of the candle. Now, when I say of the candle, if you don't know my strategy or anything, or you don't know much about supply and demand, you're probably wondering, what candle are you talking about? There's a whole bunch of candles, Alex. The candle that I'm talking about is called the previous contrary candle, okay? The previous contrary candle. Now, if that's still confusing for supplies, right? When you're finding your levels of supply and you're marking those out, you are marking the last bullish candle before the move down. From a supply level, you are marking the last bullish candle before the move down. And from your demand levels, you are marking the last bearish candle before the move up, okay? So remember, supply you sell from, and when you're finding and marking your levels of supply, you're going to be looking for the last bullish candle before the move down, and you are marking the lowest point of the previous contrary candle. For your demands, you're buying from those, and you are going to be looking for the last bearish candle before the move up, and you are marking the highest point of that candle. Let's go ahead and I'm going to show you an example. So remember, this line that I marked right here, see how this is the last blue candle before the move down? That is our previous contrary candle, and that is a level of supply. So we would be looking to sell from this candle, okay? And now notice, supply, you mark the lowest point of the candle. You see how I marked the lowest point possible? That is how you mark a level of supply. Now, I'm going to show you an example of a level of demand, and then we're going to dive a little more into the strategy, which is the key part. So, see how I marked the last bearish candle before the move to the upside? That is our demand level. And look, I marked the highest point possible, which I put up here. Demand, you mark the highest point of the candle. Supply, lowest point. Demand, highest point. Okay, now, so you see, I mark it with a line, right? I do not mark it with a rectangle. I mark it with a line. Now, you might be wondering, why does it say H4? Well, you see these time frames up here on the top left of the screen next to this YM. We have the 1 minute, 5 minute, 15 minute, 1 hour, 4 hour, daily, and weekly. Those are the time frames I'm always looking at. Those are the ones I mark my levels of supply or demand on. Now, with this strategy, in order for you to take a trade, you need minimum 2 levels of supply or demand in confluence. Okay? Minimum 2 levels of supply or demand in confluence. Now, when I say minimum 2 levels of supply or demand, you're going to have most likely 99% of the time 2 supply or demand levels on at least 2 different time frames. So I'm going to go ahead and show you what that looks like so you can get a good understanding. But this is the baseline. In order to take a trade, you need minimum 2 time frames in confluence, 2 levels of supply or demand. So for an example, you see how we have the H4 right here at the very bottom of this candle. If we were to want to enter off of this, I could not enter off this as of right now because that is only 1 level of supply in confluence, aka 1 time frame in confluence. Now, remember, you want to mark it on these time frames. Let's just drop to the H1. Now see this last blue candle before the move to the downside? That is what's called a previous contrary candle. You would mark the lowest point possible, and we're on the 1 hour time frame, so you would mark it with H1. Now those are custom templates I made, so yours, you might have to make your custom templates, but you would mark it with H1. Now I have 2 time frames in confluence, so that is the minimum time frames in confluence that I need in order to place a trade. Now I'm not going to do this on every single time frame for every single example because it'll just take a while, but I want you guys to get a baseline of this strategy. Now, see, we have a blue candle right here, which yes, can be a previous contrary candle. You can mark that. But see this blue candle right here as well? See how that's still blue? You would mark the very bottom of that, and you would put M15. And now look at this. I have 3 time frames in confluence right here. So what would I do? If I was looking to actually take this trade, I would put short position. We're on YM. For YM, I use 40 points for a stop loss typically, and we like to go for at least a 1 to 2. So this is what my trade would be looking like. Once it hits these levels, I enter with a limit order. I would have my limit order pending right there. So right when the market came, tapped right into that line, the H1, I would have got in, right? And then obviously supply levels we're looking to sell from, so I'd be looking for a move to the downside. Now, with this strategy, like I just mentioned, with limit orders and stuff like that, this is just a preference, to be honest, but for me personally, I only use limit orders. You will never see me use a market execution for an entry or anything like that. I believe limit orders are just the most accurate way, so I will only use limit orders. But this is an example of 3 time frames in confluence. Remember, we need minimum 2. Now, one other thing is the more time frames in confluence, aka the more levels of supply or levels of demand you have in confluence. If I say time frames, it means levels of supply or levels of demand. But the more time frames in confluence equals the higher probability for the trade to go your way. So the more time frames in confluence, aka the more levels of supply or demand close to each other within your stop loss, equals the higher probability. So that is a example of levels of supply, and you have 3 time frames, aka 3 levels of supply in confluence. So you get a baseline of how I mark it. I mark my levels of supply or demand a lot differently than a lot of other people, and I need minimum 2 time frames in confluence. So I'm looking at all these time frames right here to see which ones line up. Like I said, I'm not going to do this for these examples because it might take just a little longer. And I want you guys to get a baseline of the strategy, right? Now, if we were to go look for levels of demand, remember, we had an H4 right here. Let's mark this candle. Why? Because this is that previous country candle to the move up on the 1 hour time frame. So you're going to mark the highest part of the candle, and you're going to mark it with H1 because we are on the 1 hour time frame. Let's go to the M15. Would you look at this? See how there is a bearish candle right here and then a strong move to the upside? We are going to mark the highest point possible with M15. Now, if these are just like a tick or two off, my bad. I do not have my glasses on right now, but remember, you mark the highest point possible. If we go to the daily, there is no daily right here. Where would our daily be? This bearish candle before the move to the upside. So you would mark the highest point possible, and that is right here, and you're going to label it with daily. Make sure that's accurate. There you go. Now, let's see if there's an M1 in confluence with these up here. Last bearish candle before the move to the upside. Yes, you have one right there, but we're stacking these right now, which you could always mark this one. I'm actually going to do that as well. I'm going to mark this 1 minute candle. And then I'm also going to mark this 1 minute candle. Now, see how this M15 lines up with that 1 minute? You're just going to want to double click that line and put /M1. And then there you go. Now you know you have 2 levels of demand right on that same line. Now, I only use a 40-point stop loss, but I'm going to use this just as an example. Let's say your trade covered all these time frames, right? And let's say it was at least a 1-to-1, 1-to-2, whatever it may be, right? This is just an example. So in this example right here, we have 1, 2, 3, 4, 5 time frames in confluence. That would be a higher probability setup. Now I'm going to show you guys a quick example real quick on why more levels is a higher probability. All right, so I'm going to do the example right here. Let's say we have 1 level of demand and that is it. Let's say price is coming down. Now, obviously it's a demand. We're looking for buys. And let's say price taps into it, gets a little bounce, and then breaks below it. Where's price most likely going to go? It's most likely going to go straight to stop loss. Why? Because we do not have the minimum 2 time frames in confluence. We only have 1 level of demand in confluence. So this would be a low probability setup. I would not even take it because there's only the 1 level of demand in confluence. Now, if I were to go ahead and add a second line right here, and let's just say it's an M15 and price is coming down, we tap into the M1. Obviously, we want to go to take profit right off that first level because that's where our entry's at. But let's say price is going down. We tap into this M15. That might send it to TP. Now, think of every level of supply or every level of demand as just an opportunity for price to reverse and go your way. So like I said, if price didn't go our way off of this M1, off that first level of demand, now we have 1 other level of demand for price to potentially bounce from and go back into profit before hitting stop loss. So see how that gives us just an extra probability for it to go our way? Think of every single line like that. So if we had another one here, and let's just say we had another one here, we have 4 opportunities for price to reverse and go our way. So if it didn't go our way off the first one, off the second one, the third one, we still have this 4th one for price to potentially bounce and start moving back in our direction. You see how better the more time frames in confluence looks just compared to 1 time frame in confluence? Like this example right here, our full-on red area is stacked with opportunities for it to reverse and go our way before stop loss gets hit. And that is what creates a higher probability setup. Now, that example right there was on a level of demand, but it would be the same thing if we were talking about a level of supply. So if I just dragged this up and I just did this, look at this. 4 time frames in confluence. You see how much of a higher probability this looks because we have all these opportunities for price to reverse and go into profit. But if I deleted, let's say this one, and this one, let's say price goes above it, Where's price most likely going to go? It has nothing to reject off of to try to go back lower, so it's most likely just going to go to stop loss. That is why you want as many time frames in Confluence as possible, guys. It's all super important. I've been trading this strategy for quite some time now, and man, it's genuinely one of the best strategies. So let's just do a quick little recap. Supply, you sell from. You're marking the lowest point possible of that candle. Now, remember, when I say of the candle, I am talking about the previous contrary candle. So for a supply, you're marking the last bullish candle before the move down. That is your previous contrary candle. That last bullish candle before the move down is the previous contrary candle for a level of supply. For demands, you're buying from, you're marking the highest point of the candle. And remember, you're marking the last bearish candle before the move up. That is the previous contrary candle. The last bearish candle before the move to the upside is the previous contrary candle. I'm repeating that because I know that confuses some people. Now, the more time frames in Confluence equals the higher probability. And remember, we need minimum 2 levels of supply or demand in Confluence in order to take a trade. And you guys just seen an example. The more time frames of Confluence, the higher probability. You have to think of each level of supply or level of demand as an opportunity for price to reverse and go your way. Now, I have plenty of other videos on my channel that you guys can watch and actually see more in depth of how I mark my strategy and stuff like that. I also have some past live streams where you can see me trade live. But if you wanted to trade live with me and actually see it daily, if you click the link in the bio or link in the description that says trade live with me, that is where you'll gain access to the premium Discord and the live trading sessions. If you wanted to learn from me one-on-one and you actually wanted me to teach you everything I know about strategy, risk management, discipline, patience, everything that brought me from an unprofitable trader to a profitable trader, click the link in the bio or link in the description that says apply to the one-on-one mentorship, and we can get to work. But that right there, guys, is the strategy. And I didn't want to get too deep into it to confuse you guys. I wanted to just do a baseline around it. But there's plenty of other videos, like I said, on my YouTube channel. And there's plenty of other options you can learn from me. But I want you guys to realize how good this strategy is. Take the time and learn it. Do not rush it. Give it time, like I mentioned. It is truly a very accurate strategy. This is one of the strategies that genuinely changed my life. This actually is the strategy that changed my life, I should say. But if you guys have any questions, make sure you leave a comment down below. And if you like the video, make sure you leave a like and subscribe.